Hello dear students, in this video we are going to see the trial balance whole problem. In this video we are going to see how to make the journal entry. From that journal entry we are going to prepare the ledger, and from ledger we prepare the trial balance. In previous video we have seen separately the journal entry and ledger posting, but in this video we are going to see all things in one video, that is trial balance. Preparation of journal entry from the business transactions. From journal entry we are going to prepare the ledger posting, and from ledger posting we prepare the trial balance. These are the business transactions. From this business transactions, we are going to prepare the journal. This is the journal pro forma, date, particulars, ledger, folio, debit and credit. First transaction is X started a business with a capital rupees 10,000. First step of journal entry is we have to identify which two accounts involved in these transactions, capital and cash. Okay. First of all, we have to write down the date, 1st December. Cash account and X capital account. Cash account is a real account. Rule of real account is debit what comes in. Here cash is introduced, means cash is coming into the business. That's why cash account is debited with rupees 10,000. X capital is a type of personal account. Rule of personal account is credit the giver. Here X gives the cash for the business. That's why X capital account is credited with rupees 10,000. And this is the short explanation about the transaction being started a business with cash. It is called as narration. And second transaction, purchase goods from Mahesh. Okay, two accounts involved, purchase and Mahesh. Purchase is a real account, Mahesh is a personal account. While purchasing, goods are receiving or coming into the business. That's why purchase account is debited to Mahesh. Mahesh is a personal account. Rule of personal account is credit the giver. That's why purchase account is debited to Mahesh account credited. Being good purchase from Mahesh on credit. 3rd December, sold goods to Mahesh for cash. Here transaction is in cash. That's why one account is cash, another is sales account. Cash and sales both are real account. Rule of real account is debit what comes in, credit what goes out. Cash is coming in, that's why cash account is debited. Goods are going out of the business, that's why sale account is credited with rupees 3,000. Narration is being goods sold for cash. Purchase machinery for cash. Okay. Here machinery and cash, again two accounts. These two are both are the real account. Rule of real account is debit what comes in, credit what goes out. Machinery is coming into the business, that's why machinery account is debited. Cash is going out of the business, that's why cash account is credited with rupees 6,000. Narration is being machinery purchase for cash. Fifth transaction, sold electric motor to Ravi. Here person name is mentioned. That's why we assume that the given transaction is in credit basis. To account Ravi and electric motor. Ravi is a personal account. Rule of personal account is debit the receiver. Here receiver, electric motor receiver is Ravi. That's why Ravi account is debited. To electric motor. Electric motor is a type of real account. Real account rule is credit what goes out. Electric motor is going out of the business. That's why electric motor account is credited with rupees 4,000. Narration is being sold electric motor. Sixth transaction, cash received from Naresh. Two accounts, cash and Naresh. Okay. Cash received means cash is coming into the business. That's why cash account is debited. To Naresh. Here Naresh is giver. The rule of personal account is credit the giver. That's why Naresh account is credited with rupees 2,000. Being cash received from Naresh is the narration of these transactions. Then seventh transaction, cash paid to Z. Okay, two accounts, Z account to cash account. Here cash is paid. Z is personal account. Z is receiver. That's why Z account is debited. To cash account. Cash is going out of the business. That's why cash account is credited with rupees 4,000. Narration is being cash paid to Z. 8 December paid salary to Ravi. Okay, two accounts, salary and cash. Salary is expenses. Rule of nominal account is debit expenses and losses. That's why salary account is debited with rupees 1,000. To cash account is credited. Cash is going out of the business as per the real account rule. Credit what goes out. That's why cash account is credited with rupees 1,000. Narration is being salary paid. Ninth, December rent received from Y. Two accounts, cash and rent. Cash is coming in, that's why cash account is debited to rent account. Here rent is income. This is a type of nominal account, and rule of nominal account is credit all income and gain. That's why rent account is credited to rent account rupees 3000. Being rent received is the narration of this transaction. 10 December sold goods for cash. Two accounts, cash account to sales account. Both are the real account. Cash is coming in the business. That's why cash account is debited. Goods are going out of the business. That's why sales account is credited with rupees 9000. Narration is being goods sold for cash. 11 December cash purchase. Two accounts, purchase and cash. Purchase, while purchasing goods are coming into the business, that's why purchase account is debited to cash account. Cash is going out of the business, that's why cash account is credited with rupees 3000. Narration is being cash purchase. This is the journal entry of these transactions. Okay. This is a journal, total journal. Now we are going to prepare the ledger of this journal. Okay, this is the journal entries. Cash to X capital account. First of all, we are going to prepare the cash account. First step of ledger posting is we have to identify the dates in which cash account is recorded. Okay, on 1st December, cash account entry is on the debit side. That date, credit account we record on the debit side of the ledger. X capital account to X capital account 10,000. Then 3rd December, cash account entry is on the debit side. That date, credit account we record on the debit side. 3rd December to sales account 3000. Then 4th December, here cash account entry is on the credit side. That date, debit account we record on the credit side. Okay, 4th December by machinery account rupees 6000. Then 6th December, cash account entry is on the debit side. That date, credit account we record on the debit side. 6th December to nourish account rupees 2000. Then 7th December. 7th December, cash account entry is on the credit side. That date, debit account we record on the credit side. That is 7th December by Z's account rupees 4000. Then 8th December, cash account entry is on the credit side. That date, debit account we record on the credit side. Okay, 8th December by salary account rupees 1000. Then 9th December, cash account entries on the debit side. That date, credit account we record on the debit side to rent account rupees 3000. And 10th December, cash account entry is on the debit side. That date, credit account we record on the debit side. Okay, to sales account rupees 9000. Okay, 11 December, here cash account entry is on the credit side. Okay, that date, debit account we record on the credit side. That is 11 December by purchase account rupees 3000. Okay, after recording all debit and credit, now we have to total both the sides, debit side total and credit side total. Okay, here debit side total is 27,000. Okay, credit side total is lesser than 27,000. Okay, that's why to balance both the sides, we need to add some amount on the credit side to bring both the sides 27,000, 27,000. That's why at the end date of that month, okay, December, that is 31st December, we write by balance carry down rupees 13,000. Okay, when we add 13,000 on credit side, then both the sides, debit side as well as credit side, are equal. That is 27,000, 27,000. This is the closing balance of cash ledger. This is carried down for the next month, which will be the opening balance for the next month. Okay, that's why we write down on the opposite side 1st January to balance brought down rupees 13,000. This is the cash ledger. Okay, next account we are going to prepare X capital account. Okay, X capital account. Okay, X capital account entry is on the credit side. That credit side means we record that date transactions on credit side. Okay, but which account we record? We record the debit account. Debit account is 1st December by cash account rupees 10,000. Okay, there is no another date in which cash X capital account is recorded. That's why we are going to mention only credit entry. To balance the both the sides, we record end date of that month, that is 31st December. To balance, carry down 10,000. Now both the sides are equal, 10,000, 10,000. This is the closing balance of X capital account on 31st December, which will be the opening balance for the next month. We record on opposite side, that is 1st January. To balance, brought down rupees 10,000. This is the X capital account ledger. Next is purchase account. Okay, we follow the same sequence. Okay, next is purchase account. Purchase account, here on 2nd December, purchase account entries on the debit side. That date credit account we record on the debit side. To 2nd December, to Mahesh account rupees 4,000. Then 11 December, you can see here 11 December there is a purchase account entry on the debit side. That date credit account we record on the debit side. That is 11 December to cash account rupees 3,000. Okay, there is no any date in which purchase account entry on the credit side. That's why to balance both the sides, debit side is 7,000. To balance the credit side, we need to add the balancing figure, that is 31st December by balance carry down rupees 7,000. Now both the sides are equal, 7,000, 7,000. This is the closing balance on 31st December. This will be the opening balance for 1st January, that we write down opposite side. Okay, 1st January to balance brought down 7,000. This is the purchase account ledger. Next account we are going to prepare the Mahesh account. Okay, Mahesh account. Here Mahesh account entry is on the credit side, means we record that on the credit side. But which account we record? Debit account, that is 2nd December by purchase account rupees 4,000. To balance both the sides, 31st December to balance carry down 4,000. Now both the sides are equal, 4,000, 4,000. This is the closing balance of Mahesh account. That will be the opening balance on 1st January. We record on the opposite side, 1st January by balance brought down rupees 4,000. This is a Mahesh account ledger. After Mahesh, we are going to prepare the sales account. Okay, sales account. Sales account entry on 3rd December. Sales account entry is on the credit side. That date debit account we record on the credit side. That is 3rd December by cash account rupees 3,000. Then 10th December. Sales account entry is on the credit side. That date debit account we record on the credit side. That is 10 December by cash account rupees 9,000. Now total of the credit side is 12,000. Okay, to balance the debit side, we need to add balancing amount. Okay, that we call it as a credit balance, because credit side is higher than the debit side. 31st December to balance carry down rupees 12,000. Now both the sides are equal, 12,000, 12,000. This is the closing balance of sales account on 31st December. That will be the opening balance for the next month. Okay, that we have to record on the opposite side. 1st January by balance brought down 12,000. Okay, now second account, next account is machinery account. Machinery account, here machinery account entry is on the debit side. That date credit account we record on the debit side, that is 4th December to cash account rupees 6,000. To balance both the sides, 31st December by balance carry down 6,000. Now both the sides are equal. Okay, 6,000, 6,000. This is the closing balance of machinery account. Now this will be the opening balance for the next month, that is 1st January to balance brought down rupees 6,000. This is a machinery account ledger. Now we are going to prepare, after machinery we prepare the Ravi account. Okay, we follow the same sequence, okay, of the journal. Ravi account, here Ravi account entry is on the 5th December. Ravi account, you can see a Ravi account enter on the debit side. That date credit account we record on the debit side. 5th December to electric motor account 4,000. To balance both the sides, 31st December by balance carry down rupees 4,000. Now both the sides are equal, 4,000, 4,000. This is the closing balance of 31st December. That will be the opening balance. 1st January to balance brought down 4,000. This is a Ravi account ledger. After Ravi, we are going to prepare the electric motor. Electric motor account on 5th December, electric motor account is recorded on the credit side. That date, debit account, we record on the credit side. 5th December by Ravi account rupees 4,000. To balance both the sides, we need to add balancing amount. 31st December to balance carry down 4,000. This is the closing balance. This will be the opening balance for the next month. That is, we record on the opposite side. 1st December by balance brought down rupees 4,000. This is the electric motor account ledger. After electric motor, we prepare the Naresh account. In Naresh account entry is 6th December. Okay, Naresh account entry is on the credit side. That date, debit account, we record on the credit side. 6th December by cash account rupees 2,000. To balance both the sides, 31st December to balance carry down 2000. Total of both the sides 2000, 2000 is equal. This is the closing balance of Nourish account. That will be the opening balance for the next month. We write down on opposite side, 1st January by balance brought down rupees 2000. After Naresh, Z's account. 7th December Z account entry on the debit side. That date credit account we record on the debit side. 7th December to cash account rupees 4,000. To balance debit and credit we need to add balancing amount, that is 31st December by balance carried down rupees 4,000. Now both the sides are equal, 4,000, 4,000. This is the closing balance of Z's account. That will be the opening balance for the next month. We record on the opposite side. 1st January to balance brought down rupees 4,000. After Z's account, we are going to prepare the salary account. Salary account. Here salary account on 8th December, salary account entries on the debit side. That date credit account we record on the debit side. 8th December to cash account 1,000. To balance both the sides, we need to add balancing figure. 31st December by balance carry down rupees 1,000. Now both the sides are equal, 1,000, 1,000. Okay. This is the closing balance. Opening balance will be 1st January to balance brought down rupees 1,000. This is a salary account ledger. Then salary after salary, rent account. Rent account. Okay. Here rent account on 9th December, rent account entries on the credit side. That date debit account we record on the credit side. 9th December by cash account rupees 3,000. To balance both the sides, 31st December to balance carry down rupees 3,000. Both the sides are equal now, 3,000, 3,000. Okay. And this is the closing balance of rent account. That will be the opening balance for the next month. That is 1st January by balance brought down rupees 3,000. Okay. All these are the ledger posting of these journal entries. Now we are going to prepare the trial balance. Remember, in trial balance we record all the accounts, that is cash account, ex capital account, purchase account, and that account record we that account entry on 1st January entry. Okay, this cash account balancing amount of 1st January is on debit side. That's why while preparing the trial balance we record cash account on the debit side. Ex capital account is on the credit side because 1st January entry is on the credit side. Purchase account we record on the debit side because 1st January entry is on the debit side. Mahesh account we record on the credit side because 1st January entry is on the credit side. Sales account we record on the credit side because 1st January entry is on the credit side. Machinery account also we record on the debit side because 1st January entry is on the debit side. Ravi account we record on the debit side because 1st January entry is on the debit side. Electric motor we record on the credit side because 1st January entry is on the credit side. Naresh account we record on the credit side because 1st January entry is on the credit side. Z's account we record on the debit side because 1st January entry is on the debit side. Salary account we record on the debit side. 1st January entry is on the debit side. Rent account we record on the credit side because rent account, closing balance of next month, opening balance of the next month is of 1st January entries on the credit side. That's why rent account we record on the credit side in the trial balance. Okay, this is the trial balance we prepare. Or another rule of recording the preparing the trial balance is all assets and expenses. All assets and expenses we record on the debit side. Cash, purchases expenses, machineries asset. Okay, all assets and expenses we record on the debit side, and all liabilities, income and capital, all liabilities, income and capital we record on the credit side. And when we total debit and credit, if that total is matched, then we can say that each and every transaction is recorded correctly. If this total is mismatched, then there will be some mistakes. There may be some mistakes while recording the transactions in a journal and ledger. Okay, that's why this total should be equal. Then only we can say each and every transaction is recorded accurately. Okay, this is all about the trial balance problem number 2. Thank you.